Hello, everyone, and welcome to Thursday morning. It's Stephen Whiteside here from theuptrend.com. Well, it's very quiet out there this morning. U.S. markets are closed, so we're not going to get a lot of adult supervision this morning, and I would expect volumes to be down at least 50% or more today. Now, this was a special week for the market. It had a bullish bias to it. We knew we were coming into the Thanksgiving Day holiday, which has a bullish bias. And we also know we're coming into month end, which also has a bullish bias. Now, having a bullish bias does not guarantee success, but it often dampens any downward pressure the market might see. And so far this week, it has been very bullish. One of the things we were expecting, though, was for volume to taper off dramatically throughout the week. And so while the market has been moving higher, fewer and fewer people have been participating. Now, here's the volumes for the past few days for the NASDAQ 100 ETF. And you can see last Thursday, 117 million, 103 million on Friday. Monday was 60 million. Tuesday was 57 million. On Wednesday, we had 42 million shares traded. So yes, the market has been going up this week, but fewer and fewer people have been participating. Now, like everyone else, we have a Black Friday sale this week. We didn't blast it out to the whole world. I don't like to have marketing events that bring in a lot of new subscribers because we have to allow time for our one-on-one tutorials. So we did have a selective group of people that we sent Black Friday sales uh, invitations to over the past few days. If you think you should be on that list, please drop us an email at sales@theuptrend.com, and we'll certainly get that offer out to you. Now, we are taking a couple of days off next week. We'll be closed Monday and Tuesday, so we're going to do a complete site update on Saturday, and then next time we'll be updating the website will be next Wednesday evening, and then I'll be back on Thursday morning. Now that we've got the housekeeping out of the way, let's look at the 2025 performance year to date. The Canadian market is certainly outpacing the U.S. market right now. And of course, everybody's still focused on those big cap tech stocks and the world of AI, but that is still not helping the U.S. market outperform the Canadian market in 2025. Now, one of the benchmarks people use to look at market performance is the moving averages, especially the 200-day moving average. And if something's trading below the 200-day moving average, people often consider it to be in a bear market. And you can see the iShares for the TSX 60 pulled back to the 50-day moving average and then bounced and is now making new all-time highs. We've got the tech sector, which traded down to the 200-day moving average over the past couple of weeks and has started to come back over the past few days. But the 200-day moving average is acting as a significant area of support for the Canadian technology sector. One way that we can look at the overall market performance is the percentage of stocks currently trading above their 200-day moving average. And you can see that once again, the Canadian market is outpacing the US market, and the TSX composite is outpacing the TSX 60 at the moment. Now, looking at Bitcoin, for example, which broke down below the 200-day moving average over the past month, it is starting to come back, but all of those moving averages, which were potential support on the way down, will more than likely act as potential resistance on the way back up. So just keep that in the back of your mind. Now, semiconductors, which the world is watching very closely, they came down to the 200-day moving average, and so far that has acted as support. So if the U.S. market is going to continue to move higher at this time, we need to see semiconductors continue to move higher. Now, on the Dow 30, which of course is the most widely watched index in the world, has 30 of the biggest companies in the world. There are a handful of them that are currently trading below the 200-day moving average. And you can see that in 2025, this has not been a good year for Salesforce, which recently ran up to the 200-day moving average, and the whole world was watching to see if investors will take this particular stock up and over that level, and it could not. It acted as resistance. So here we are trading below all the major moving averages at this time. Another stock that's broken down is Chevron, and it has recently made lower lows and lower highs, so that's pretty bearish. Then we've got Disney below the 200-day moving average. We've got Home Depot, and we've got Boeing below the 200-day moving average at this time. Now, looking at Microsoft, this is interesting. Microsoft came down below the 200-day moving average over the past few days and recovered yesterday. We'll have to see if the market will take Microsoft higher from this point, but that's a very bearish looking chart for Microsoft. Now, if you had have asked me at the start of the year, would these stocks, these are the biggest stocks in Canada, outperform the US market, which is still focused on the Magnificent Seven and anything AI related? But with the US going into recession, there's a lot of downward pressure on that market outside of those big cap tech stocks. The Royal Bank's the most valuable company at the moment, followed by Shopify. And Shopify could certainly overtake the Royal Bank if we get a year end rally in tech stocks. But if you look down this list, it's mostly bank stocks. And then, everybody thinks the Canadian market is all about commodities, but we do have one gold stock. And then at the bottom of this list, we've got one energy stock. So it is certainly mostly bank stocks in the top of the most valuable companies in Canada. Compare that to the US, which, of course, these companies are much larger than anything in Canada. And, this list is mostly big cap tech stocks. So even with this list that the world is focused on, the Canadian market is outperforming the US market at this time. When you get down to the bottom, Berkshire Hathaway, more of an insurance mutual fund company, then Eli Lilly, drugs, of course, and then Walmart retail. That makes out the bottom of this list. But if you just look at the top, those are all big cap tech stocks. Now, the Canadian banks have been leading the market higher this year, and when we look down our list, Bank of Montreal is the only one struggling at the moment, and it is back on a buy signal as of Tuesday's close. Got some fall through to the upside on Wednesday, while the Bank of Nova Scotia made a new high on Wednesday. We've got CIBC. We were looking for a close above $120.12, and we closed at $120.30. So we are back on a buy signal as of Wednesday's close. Joining the National Bank, which has been the big winner over the past couple of months, making a new high. There's a new high for the Royal Bank on Wednesday and a new closing high for the TD Bank on Wednesday as well. The Laurentian Bank is back on a buy signal, had an inside day on Wednesday, so nothing going on there at the moment. Now, looking at who's in control for the Bank of Montreal, the pros just came back to take control, and that could be a sign that the Bank of Montreal is going to move higher from here. Looking at the Royal Bank, we treaded water for quite a while, and we were looking for a breakout above the high. We finally got that, and we started to move higher. And you can see that the pros and the public were intertwined for a while. Now, while we were trading sideways, the pros really didn't walk that far away from the market. So, yeah, we had a couple little dips, but here we are back with the pros in control and continuing to make higher highs. The Laurentian Bank, on the other hand, the pros have pulled back over the past couple of days, so this a little buy signal may not last. Compare that to the National Bank, which is certainly making higher highs, and the pros certainly look like they are committed to this particular stock at this time. Now, our next price target for the National Bank is $168.75. If we take that out, then 175 would be our next target to the upside. And you can see we're trading well away from the flypaper channel. And if the National Bank were to break down and if the market were to turn lower, then we would expect the flypaper channel to act as support. Now, this is not really a trader's stock. If you're an aggressive trader, if you're swing trading, the National Bank is probably not for you. It has an average true range of just 1.19%. So it doesn't move that quickly in percentage terms compared to a lot of other stocks in the Canadian market. But if you're a conservative investor, that's one of the reasons that you're looking at banks, and this is certainly the one to watch in 2025. Moving on to another important sector of the Canadian market, and that is the energy sector. When we look at this seasonality chart of crude oil, you can see that traditionally we peak in the middle of the year and then sell off going into early December and then get a rally into year end. But the volatility of crude oil has been compacted over the past few years. You remember one time we were up at $150, then we came all the way down, and now we've been trading sideways for years now. We usually get a peak in crude oil in the middle of the year. So in 2022, it was the middle of the year. 2023, it was close to the middle of the year. 2024, it was near the start of the year. And in 2025, we had a peak earlier in the year. So not expecting a lot to happen coming into year end. Crude oil is currently on a sell signal right now. The pros are not in control. Doesn't look like they want to take control coming into Friday's trading action. You can see in October, we made a low down at the 56.25 level and a high up at the 62.50 level. So that's the short-term range that we're in. We're looking for a breakout of that range. And right now you can see we're trading below the halfway point of that range and looking to see if support will hold. Now, natural gas usually peaks coming into the end of November and then starts to sell off. Natural gas has also been compacted over the last few years. You can see back in 2022, we had a huge move up towards $15, and here we are down in the $4, $5 area at the moment. Looking at a daily chart, you can see that we ran up and peaked, so very similar to what the seasonality tells us. And we should be selling off going into year end. We're currently on a sell signal. Yesterday was an inside day. So far, support is holding. If that breaks, then 430, 410 are the next targets to the downside. While we have pulled back over the past couple of days, the pros are still in control. So there's still hope that we could continue to move higher from here. Now, when we look at a monthly chart of Canadian energy stocks, you'll see that there's absolutely no correlation between the price of crude oil and natural gas and how the stocks are doing. There's the energy sector making new all-time highs at the moment, and that is certainly totally out of sync with what's going on with the commodities themselves. Now, looking at the energy ETF, we've got a new early warning signal up there. We're still projecting higher prices at the moment. We did peak and then dip down to the lower channel line and then bounced. So there's certainly a possibility of a sell signal at this time, but the pros do not look like they want to give up control at the moment. We drove up to the 2031 level last week, got as high as 2028 before reversing. And so if we can get up to 2023, then 2109 and 2188 do come into play for this particular sector. Now, when we look at the flypaper channel, a couple of things you'll notice is, first of all, investors are definitely willing to buy the dip. And you can see that anytime that we got down to these levels, the flypaper channel held as support. And so we're expecting that to continue unless something major happens to crude oil, for example. But right now, it's still looking very, very bullish at this time. Now, the sector itself, most of the stocks in the sector look pretty similar. Canadian Natural Resources is the big player. Did dip through the lower channel line on Tuesday, but came back on Wednesday. So we're still on a buy signal here. That would change on Thursday with a close below $46.13. And when we look at the average true range of Canadian Natural Resources, it's 2.29%. So almost twice as much as the National Bank. And of course, you're not going to use this number to compare the two. A bank stock is a totally different animal than an energy stock, but that's the type of volatility that you're looking at in a typical energy stock. One of the high flyers and one of the stocks that ends up near the top of the most active list daily is Baytech. And you can see that we're up at the top of the panic zones. An early warning signal has gone off. We're still trading above the upper channel line, so that is bullish. We had a quiet day yesterday. It was an inside day. On Thursday, we're looking for a close below $4.20 to give us a sell signal. If we can take out the recent high, 469, that takes us to 508, and then 547 are the potential targets to the downside. You can also see we have an open gap over here. Open gaps, you only care about them if you're moving in that direction. And so far, we're still on a buy signal here, so we don't care about that open gap. And the pros certainly look like they're still in control. Little dip over the past couple of days, but no major change for the pros. And as you can see, investors have been willing to buy the dip over the past few months. We were below the flypaper channel. We got up to it, still stuck to it, came back down. Then we started to trade above it, found support, trade above it, found support. So we expect anytime we get a pullback, we'll still find support in the flypaper channel. Notice over here, the average true range for this particular stock is 5.24%. So this is where we get into this is a stock for aggressive traders. There's a lot more opportunities to make and lose money on this stock than there has been when you compare it to the other stocks that we previously looked at. Now, with Shopify at the top of the most valuable Canadian companies, you can see that is quite large compared to the rest of the grouping. And I mentioned this the other day, the fact that everybody knows who BlackBerry is, but BlackBerry is like, 1/90th of what Shopify is valued at the moment. So what Shopify does really, tells us what's going to happen in this index and especially the ETF. There's a monthly chart of the tech sector ETF, and you can see the nice run that we've had over the past couple of years. Recently, we had a pullback. I mentioned we pulled back to the 200-day moving average and bounced. And so now it looks like we may take a run at the previous high. And you can see we're back on a buy signal here as of Monday's close. So we continue to move higher on Tuesday and Wednesday. And then look at Shopify. Shopify is going to look pretty close to the ETF itself as it makes up most of the ETF. Now, when we go through the other major Canadian tech companies in the index and ETF, most of them do not look like Shopify or the index itself. And so here we've got Constellation Software, the second most valuable company. It is currently on a buy signal, but down at the bottom right-hand corner of the screen, then we've got Celestica, which is a bit closer to Shopify than the other stocks in this list. We've got the CGI Group on a buy signal. We've got OpenText still waiting for a close above $47.88 to give us a buy signal. Descartes still on a sell signal here, no change there. No change for Kinaxis on a buy signal right now. Little pullback yesterday, but still trading above the upper channel line. No joy for BlackBerry at this time. And then we've got Bitfarms. It is back on a buy signal as of Wednesday's close. No joy for Lightspeed at the moment, making a new low for this move on Monday. Then it came back on Tuesday and a little pullback on Wednesday. So no change in trend for Lightspeed. Let's finish off this morning's presentation, taking a look at the world of mining. And there's a monthly chart of the price of gold, a monthly chart of the price of silver. Both of these have had incredible runs over the last couple of years, and I don't think it's a good thing. I think that the fact that these commodities are moving up so sharply tells us there's a lot of investors worried about economic calamity coming in the not so distant future. I also think a lot of governments are buying gold and silver as a hedge against the US dollar. And as countries are moving away from the US dollar, they're trying to put money in gold. So I think it's a good thing we can take advantage of it, but I think it's also telling us that something bad is probably going to happen. Now, gold stocks have been moving up with gold and silver over the past couple of years. That has been a good thing. On a daily basis, you can see we recently had a pullback down to the bottom of the panic zones, pressure zone formed. We started moving back up. We had an early warning signal, but the market has waved that off so far. Agnico Eagle is the biggest player at the moment, and it recently had a couple of sell signals, but has come back fairly quickly. So looking for a potential run up to the recent high. There's Barrick. Barrick has outperformed Agnico Eagle recently and really did not have a dip over the past couple of weeks. There's Endeavor. So most of the gold stocks are pushing up towards the right-hand corner of the screen. There's Eldorado. There's Equinox making a new closing high yesterday. Then we've got Franco-Nevada moving up. We've got IM Gold making a new high yesterday. We've got Kinross moving up. What's not working at the moment, B2 Gold has had trouble over the past month or so, and it is starting to come back up. It generated a buy signal on Monday, saw a fall through to the upside on Tuesday and Wednesday. And now we have the pros coming back to take control. There's a bearish reversal signal marking the low for this particular move. And now we've got the pros taking control. So it looks like B2 Gold may start to play catch up with the rest of the gold sector. We moved up to the 625 level yesterday, And if we continue from here, then 703 and 781 are the next two targets to the upside. And if we get up towards 781, there's a nice open gap that we could potentially fill over the next few weeks. And you can see B2 Gold got all the way down to the 200-day moving average and now has started to come back up. So let's hope we can go back up and fill that open gap. Now, we did start to trade below the flypaper channel, didn't get too far away from it. And, as long as we're below that, we're bearish on a stock. But once we start breaking out above it, we want to be bullish on the stock. So we want to be bullish on B2 Gold at the moment. The fact that we want to be bullish on it does not guarantee success, but it certainly puts the odds in our favor. Now, when we look at Agnico Eagle, you can see that investors have been willing to buy the dip. And then looking at Barrick didn't even get close to the flypaper channel. So, while Agnico Eagle is technically bigger than Barrick at the moment, you can see that the market really loves Barrick at this particular time. Okay, folks, that is all for this morning's presentation. You can see the Canadian market is currently outpacing the U.S. market, even without all those big cap tech stocks that get all the headlines. Our conservative banking policies apparently are in vogue at the moment. And I think one of the nice things is that when the market does start to turn down, the Canadian market is probably going to get hit a lot less than the U.S. market when we do start to turn down. Enjoy the rest of your day. Next time you'll hear my voice is on Friday morning.
Thanks for tuning in until the very end of today's stock market timing educational video. If you found the content valuable, don't forget to express your support by hitting the like button, leave a comment, sharing with your friends, and subscribing to our channel for more insightful updates. Remember, in the world of stocks, timing is crucial, and following the trend can be your greatest ally. If you would like more information on how we can help you better time the stock market, please visit theuptrend.com.